look at bottom-up stock picking in IT services. Mr. Shah, I wanted to understand about these narrative stocks, because given the fact that you've seen a lot of correction actually creep in. When I talk about narrative stocks, I'll be talking about the capex-related theme, especially when you talk about the defense names, the power names. You've seen a sizable correction in those set of counters. Do you think that the correction that they've seen now merits a relook at these names? Do you think that they will continue to be a driving force going ahead?
So in a lighter vein, I will say, Asman se patke, khajur pe latke. These valuations have undoubtedly corrected, but they are still relatively high. For example, in defense, there is a great opportunity in exports market. But how many companies have technology that they can cater to exports market? How many companies have capacity that they can cater to exports market? How many companies have products which are futuristic in nature? As we have seen, the war scenario is changing. $100 million plane or a tank can be easily destroyed by a missile or a drone. So clearly in defense, companies which are catering to local as well as global market, which is futuristic in terms of their product profile, and which has capacity to deliver to local as well as global market, should do well. Over there, some amount of narrative, some amount of valuation premium is justifiable. But all other defense stocks where valuations are still high, they don't have capacity, they don't have technology to cater to global markets, I think wahan pe asman se patke, khajur pe latke is still applicable.
Well, good analogy there. Explains it all, Nilesh. But, also the question then, Nilesh, is that when the market recovers, and I mean, by recovery, I don't mean intermittent recovery, but a more broad-based one, along with, of course, earnings revival, what do you think is not going to come back? And where do you sense leadership will emerge? Will it continue to be restricted towards just banks? Or do you think it's going to get more broad-based?
So, Aisha, it's always difficult to predict where the next bull run will start. Normally, the players change, sectors change. And banks have been clearly underperformers. So there is a good chance that with valuation comfort, they could lead the charge. Consumer discretionary space also could lead the charge, as there are certain events like tax rebates and 8-pay commission to support them. Will this rally become broad-based? Well, it all depends upon FPI participation from a flow point of view or earnings momentum from the growth point of view. While we do believe our growth rates will start inching upwards, it's unlikely that we are going to move into 8% plus handle. We will still be 6.5% to 7% range. And with some divine intervention on oil and monsoon and global growth, it may go upwards of 7%, but unlikely it will reach 8%. So the broad-based rally, at least at this point of time, looks difficult unless until it is supported by growth or it is supported by flows led by FPI's buying.
And you don't expect FPI buying to kick in anytime soon, is it?
As of today, if we divide FPI categories, the long-only funds, the insurance, the pension, and the passive are on the selling side. The sovereign wealth fund and university endowment fund have been buying between October to December 24 quarter. So definitely all FPIs are not selling. In the long-only insurance pension, probably selling is driven by US-based FPIs who are taking money back to US on the promises of tax rate cuts, on the promises of tariffs and make America great again. On the passive side, it is quite emerging market. Emerging markets have underperformed relative to developed markets for last 5, 10, 15, 20 years. That has put doubt in the minds of global investors whether they should allocate to emerging market or not. Over a valuation point of view, emerging markets are much, much cheaper compared to developed markets. However, people need to see returns before they can try to catch a falling knife. I believe, at least in the near term, the FPI selling is likely to continue. Of course, they are all smart investors, so they are not going to sell at any prices. But at this point of time, keeping in mind the vacuum cleaner in America and quit emerging market movement, we do believe that FPIs are likely to be on sell side for some time.
If you like this video, then like, share and subscribe to ET Now.